What's going on? Welcome back to Financial Journey. So today we're going to talk to you about Nike. I want to go over some of the current data points, break it down on what's really been affecting it, and whether right now is a good time to buy or not. Before we get into any of that, make sure to hit that thumbs up, and with that, let's get right to it. Starting off, at the time of doing this video, it is sitting at $72.54. CPI just came out better than anticipated, as you can kind of see. So on a month over month, it was negative 0.1%. versus a forecast of 0.1, and year over year it came in at 3% versus the 3.1. If you look at the true data, not necessarily the best. It shows energy did go down 2%, meaning the other basket items did in fact go up. So again, I feel like the market's kind of torn on this, but beside the point, this does signal that interest rates are justified to be cut. And so far right now for the September 18th meeting, there is now a 78% likelihood of a 25 basis point cut. So all in all, I think the market is rallying based on that. But Nike doesn't seem to be doing all that much, so it is up 0.26%. So Nike has been lagging ever since their earnings. So in case you do not know, they had their earnings coming out recently at the end of June, so June the 27th. They did beat on earnings per share, but they missed on revenue by 249.51 million. And then aside from that, what I feel is probably the most damaging of them all, but they lowered their guidance for 2025. And just to give you an overview of what I mean, so this is looking at the annual view. So for 2025, for instance, earnings per share, there's 27 analysts with a consensus of 3.19, low of 274, high of 376. So that does represent a 19.21% reduction in year-over-year growth. That is absolutely horrific. And then aside from that, though, looking at revenue, 49.01 billion, low is 47, high is 50. That's based on 33 analysts, but that does represent a 4.59% reduction in revenue year over year. So that's not what the market wants to see. Market does not want to see any company slowing down. And I think there's a lot of consumer data that's kind of signaling that just the buying power isn't necessarily there. What I previously talked on about interest rates being cut, yes, that could really help consumers, but as it stands for the market, like it's not the greatest, and Nike clearly is very much dependent on consumers. So all in all, a slowdown is not what the market does want to see, and as a byproduct of that, you do have a lot of negative ratings that have come out. So these are all the latest analyst ratings. So last one was done 7 days ago, $105 price target buy by Goldman Sachs. Brooke, who has a 47% success rating, so that's kind of crap if you ask me. And then aside from that, 8 days ago, $92 price target. Deutsch, I'm not going to book Christina if I'm whatever, but 60% success rating. As a consensus of all the ratings, $92.48, and that does represent a 27.49% upside. I think a lot of analysts are somewhat more optimistic on rate cuts and what that will do to consumers, thus through them indirectly really helping Nike. But as it stands with a lot of their executives downgrading 2025, it's just a bad look. And so when it comes to Nike, though, if you are going to be kind of getting or taking a hit on your future guidance, that is really going to affect your multiple. And so in essence, that is what is really causing Nike to go down as much as they have been. Even looking at the Elliott Wave technicals, I'll give you guys a quick overview of that because a lot of people generally do like that. It does have a pivot point of $79. So for as long as Nike is below that, which right now it is anticipated to get between that $52 and $57 range. So kind of extreme if you ask me, but like if you look back at Nike, I'll quickly pop over here. So if you do look back at Nike, they've gone up quite a lot over this last 5 or even possibly 10 years. And so they're like, in essence, it could continue to go down. If consumers are really struggling as much as they are, then in reality, it could potentially drop to where it was back in kind of the lows of 2020, which is around 67. And so I feel like there's just a lot more damage that could be done to Nike, and just how it's lagging in the broader market. It does go to show a growing concern for just the bottom line. So that's just my own opinion. Of course, I could be wrong, but I'm going to go over some of the data points and things that you need to know. As of late, though, there hasn't been all that much for news aside from their earnings, so it's been relatively quiet, just piggybacking off of the broader market as well as the more analyst ratings and things like that. But looking at shorts, I like to bring this up more as a analysis rather than anything. Definitely not saying that Nike is a squeeze play, but 1.92% of the free float is being shorted. Works out to be 22.88 million shares overall being shorted. Utilization 0.87, and then short score 28.36. So very low stuff. Like I said, it's not a squeeze play, but like I said, it's good to analyze because over this last about 7 months, give or take, it's gone up quite a lot. So it was roughly around 1.16% of the free float. And then as of late, it recently did jump up to where it is now. So 1.92%. Even though on a percentage basis, it's not that much, they did increase almost 100% from their lows. So shorts are feeling a little bit more confident and kind of doubling down. So they do anticipate, given even where it is now, there be more downside. So something to kind of consider. This is why I like to analyze this information behind the scenes. As a grand total in shorts, even though it's a very small amount, it works out to be $1.66 billion worth of shorts out there. So pretty high stuff. Looking at options, I like to analyze this information as more of a sentiment rather than anything, but 17 million in calls, 55 million in puts. Sentiment wise though, 44% of all the options being done are optimistic and bullish. And of the call options that are being purchased, you do see a consensus for it to be above roughly $76 by the end of next week. So July the 19th. So not necessarily the best recovery. And then looking at puts, you do see a consensus for it to be sub $70. So more of a further pull down when it comes down to that. You do see some institutions buying Nike, obviously given the structure and where it is, no doubtably it's going to be bought up. But you would assume that there'd be a lot more buyers seeing value when it comes down to Nike. So it's one of those unique circumstances that clearly institutions are taking a step back because they, alongside shorts, do anticipate Nike to continue to trend down. So like I said at the very beginning of this video, there's different ways that you can see Nike as. You can see it as a long-term play if you're trying to catch the bottom or whatever else. But given a lot of the data points that I've been talking on, if you're trying to catch the bottom, I feel like there is more downside coming. So at least in the short term, right now with it at $72.65 pre-market, it is trading between this S2 and this S1. So 68.14 is going to be that next strong support. Then 73.68 is going to be that next strong resistance / target. If the 68 does fail to hold, then that's basically where that Elliott wave technicals are going to come to fruition, and it might hit that 59, which would be a steal of a deal if you ask me. But then again, when it comes down to at this price point, there'd be a lot of fear in the broader market and Nike. So usually a lot of the people that are saying that they'd buy at X amount, when X comes, they typically are too scared. So we'll just have to wait and see what does come. But like I said, based on a lot of the data points that I did bring up, yes, interest rates cuts could really help Nike and consumers. But every data point that I did bring up is kind of signaling lower lows to come. So what's your thoughts on Nike? Have you been buying? Have you been selling? What have you been doing with Nike? I did buy a little bit of Nike through CDR, but a very small amount. I think it was just $1,000 worth, so nothing crazy. And it's just more so like long term, Nike is going to do a fairly good thing. It's going to bounce back as what it usually does do, with the exception of their last earnings. So when it did go from right over here, so their last earnings, they actually never really recovered from that. So at the tail end of December, and then even right here at the end of March, like it kind of flirted with the low, but it never actually recovered to that $100 mark once again. So I feel like this is another one of those scenarios that it is not going to recover past where it previously was. So the 90s, or let alone based on everything that I mentioned, 75-ish. So I don't know. It's a very interesting scenario. Analysts seem to be very optimistic, but I think that is stemming from, like I already mentioned, about interest rate cuts, which probably is going to occur in September. So let me know your thoughts. Have you been buying? Have you been selling? One final thing that you can do is take advantage of some free shares, and that is with Moomoo. So simply sign up for a new account, throw $100 at it, and then you get 5 free stocks. Each stock is valued up to $2,000. So this is a kick-ass deal. Link in the description below and also the comments. With all that said, appreciate all of you watching.